Welcome, and for many of you, welcome back to Accelerator RegTech 2022, the Global Growth Corridor. After that little video, I'm guessing you are awake. The RegTech Association, as you know, is a leading non-profit member association, which is bringing together global speakers to examine the impacts and the opportunities for RegTech over three interconnected streams. I'm Ali Moore and I'm your moderator this morning. Yesterday, we looked at the big picture with a macro perspective on collaboration and trade. Today, we're going to drill down into institutional and regulatory reform before finishing tomorrow with the annual Pitch Fest and an exploration of new areas for RegTech applications. Again today, we're going to start with a series of rapid fire presentations of just 8 minutes each, and then we'll finish with a Changemaker roundtable discussion. A big thank you to our sponsors, especially Microsoft, Austrade, KPMG, CBA and Investment New South Wales, Deco Secure, Gung Ho Marketing and Dubber, and the many RegTechs and supporting organisations. And I urge you to visit the sponsors. You can do that by clicking on the sponsor link on the platform. Also, if you look at the housekeeping slide, you'll get all the information about how to get the most out of today's session. I'd like to start proceedings by paying our respects to the traditional custodians of the land from where you've joined us, wherever you may be, in my case, the Wurundjeri people, and we acknowledge elders past, present and emerging and their continued connection to the land, sea and sky. This morning, we'll take a look at reform within the financial system and put a RegTech lens across global standards, ESG and inclusion. We'll be joined by a wonderful group of provocateurs in this series of rapid fire sessions, and then we'll sit down virtually, of course, with a group of global changemaker leaders to delve into the issues in more detail. Just a note that only members and invited guests may attend the roundtable. There's no Q&A for the next couple of rapid fire sessions, but save your questions or share your insights over the platform. You can use the chat or the Q&A function. So to start us off this morning, the Minister for Superannuation, Financial Services and Financial Technology, Senator Jane Hume, joins us. Her responsibilities were expanded in 2020 to encompass the broader digital economy, and again in 2021, she became the first Minister for Women's Economic Security. Here's the Minister.
Thank you very much to the RegTech Association for hosting Accelerate RegTech 2022. And while I wish I could be with you in person, I am delighted to be able to join virtually for this event. Firstly, I'd like to celebrate the terrific work that Deborah Young and the RegTech Association have been doing to drive the national and now global conversation on RegTech. Your vision to build higher performing, ethical and compliant businesses through RegTech innovation and to accelerate the uptake of these tools right across the economy is truly commendable. Not only will this be central to meeting our digital ambitions, but it will create the tech jobs and investment needed to support our economic recovery. The last 2 years have tested us in unimaginable ways. Growing our digital economy is now even more important to secure Australia's economic recovery from COVID-19 and our future beyond it. And the Morrison government has set an ambitious vision for Australia to be a top 10 digital economy and society by 2030. Now, at its core, this means improving choices for consumers by getting the settings right to help them make more informed decisions. It means more agile businesses that can adapt to changing consumer needs and advances in technology. It means driving the skills, new products and creativity that will boost innovation and create new job opportunities. And it means creating a digital Australia that's safe, secure and trusted. RegTech, supported by our rapidly growing fintech sector, is at the core to realising these ambitions. No one here today needs to be told that regulatory and compliance costs are a drain on businesses across all sectors of our economy. These costs act as a barrier to new entrants and stymie the development of innovative solutions that benefit consumers and the entire economy. There's enormous potential in Australia's RegTech sector to help businesses build a culture of compliance, but through innovation. Now more than ever, we need businesses of all sizes utilising these tools to reduce their compliance costs and drive time-saving business practices. Digital transformation is also forcing governments around the world to practice what they preach and to move past outdated regulatory mindsets of set and forget. Getting regulatory settings right and harnessing innovative technology are key parts to our digital economy strategy, and RegTech is central to both. That's why the Australian government has invested in RegTech over a number of years now to ensure that Australia has an internationally competitive environment that supports innovation and supports business. Well, this includes leveraging our Business Research and Innovation Initiative to support RegTech through a $10 million dedicated RegTech round that will streamline or reduce regulatory burden for businesses, individuals or government. We've also committed to a number of RegTech and digitisation measures that support our deregulation agenda. These include over $33 million on technology to save farmers and small and medium enterprises time and money, and leverage RegTech to encourage participation in the carbon market, and $10 million to support a RegTech roadmap for modern awards. This government also knows that smarter use of data is critical to RegTech. That's one of the reasons why we've now introduced and implemented a consumer data right. Built on the principles of convenience, informed consent, security and choice, the CDR will revolutionise the way that Australians manage financial and other complex life decisions. And as it expands from banking across the economy, we will witness a fundamental change in how consumers can use their own data to make better choices, in turn providing greater opportunities for innovative fintechs and RegTechs alike. Alongside the CDR, reforms to Australia's payment system will see our regulatory architecture adapt so that we can grasp with both hands the significant opportunities being created by new payment and crypto technologies. The emergence of digital assets like cryptocurrencies is fostering new industries and innovation which have the potential to transform how people invest and transact in the economy. This substantial and complex body of work will underpin further innovation in RegTech and the financial sector for decades to come. But in order to realise all of these ambitions, it's essential that we have a workforce with the necessary skills to take advantage of those new opportunities and to propel Australia into the future. As Minister for Women's Economic Security, I'm particularly passionate about maximising opportunities for women's workforce participation and entrepreneurship. One of the ways that government can help to achieve this is by helping women into higher demand, higher paying and traditionally male-dominated industries. To support this, the government has invested $3.9 million into the Supporting Women's Mid-Career Transition into the Tech Workforce initiative as part of this year's budget. Now, this initiative exemplifies how the Morrison government is actively creating pathways for women into the jobs of the future. There's a lot happening in this space, and I'm extremely optimistic for the future of RegTech. Collectively, I think we can be excited to see where RegTech goes next as our digital economy continues to evolve. I look forward to continuing to work with you and all of you to help build Australia's RegTech ecosystem and work towards our vision of a dynamic, innovative and adaptive economy that will be a legacy for many years to come. Thank you.
Minister Hume, many thanks. And I know that RegTech being at the core of digital transformation is music to the ears of the RegTech Association and no doubt everyone who is tuning in this morning. Well, we're joined now by David Latham. He's the director with KPMG Australia, and he's also served as head of strategy to its financial services practice. Prior to this, David was a management consultant in KPMG's corporate affairs advisory and workplace relations advisory practices, where he specialised in advising clients to build and maintain their reputations and also social license. Over to you, David.
Thanks, Ali. Good morning. It's a pleasure to be here with you all today. I would like to start with acknowledging the traditional custodians of the land on which we all join this session this morning, particularly to the Gadigal people of the Eora Nation from where I am today, and pay my respects to elders past, present, and emerging. At the height of the first lockdown, it became apparent that there were several tectonic shifts underway, direct consequences of the pandemic. And in the midst of the crisis, financial services leaders were too focused on the immediate tactical needs of now, rather than keeping an eye over the horizon on what had changed strategically. Believing that we needed to begin to pivot the conversation to the future, KPMG engaged with 30 leading voices representing incumbents, challengers, big tech, academics, and policymakers to understand how the financial services industry was likely to evolve over the next 10 years. Despite the diversity of voices represented in our report, several consistent trends emerged. The first, the pandemic had rapidly accelerated the velocity of change. Many of the last pockets of resistance to digital transformation were forced to make the change by necessity. This was best characterised by Steve Johnston from Suncorp, who suggested that the financial services industry, quote, will be significantly closer to what we thought was 2025 in 2021. The second, in these uncertain times, stakeholder capitalism will become a deeply entrenched mode of operation, guiding and accelerating the pace of change and challenging individuals, firms, governments, and regulators to appropriately balance the needs of all stakeholders on this change journey. And the third, thriving in this new reality will require us to constantly push ourselves to foresee change and act early on it. There will be no tolerance for complacency. In summary, uncertainty is the new norm and the pace of change is rapidly accelerating. Now, it's all well and good for me to say this, but there is already evidence emerging that what we thought would occur much later in the decade is beginning to take shape now. As a first example, recent world events have demonstrated the power of stakeholder capitalism and the speed at which capital is now willing to respond. We also predicted the potential for bifurcation of the global financial services system, a potential reality which is looking like a much greater possibility. And there were plenty more predictions that we heard from our voices that we believe will come to fruition. We predicted central bank digital currencies and corporate coins will be core features of the global economy. Direct engagement by consumers with their financial services firms will largely fade into the past, as activities such as mortgage origination or vehicle financing have been absorbed into broader and immersive customer episodes that are served to consumers as life events. Financial decisions for consumers will be made by artificial intelligence. Algorithms will determine what offers we should consider and when we should consider them. And as consumers, we will trust that these platforms are making the right decisions for us. Dynamic, on-demand, subscription-based financial services products, including mortgages and insurance, will be the norm. Customers will expect their financial services providers to automatically offer the most competitive product that satisfies their lifestyle needs, or their technology will simply make the switch for them. Half of all revenue being generated by banks and insurers will be from new business models that are yet to be conceived. And quantum computing has revolutionised the world, challenging legacy security measures whilst offering unrivaled capacity to model and predict risk in financial markets. But this level of transformation and change won't be all smooth sailing. As an example, we also predicted that as the consumer data right becomes more prolific, customers will become more savvy with their data, and firms will be forced to learn through trial and error. Mistakes will be made, and the tolerance of regulators, firms, and customers to persevere will be put to the test. So what should you be doing to prepare for this new reality? Maintaining a growth mindset will be critical. We all need to make the shift from surviving to thriving. Be prepared to fight for the best talent in the market and look globally for it. And agility will be absolutely crucial. Build radical simplicity into your organisation. Being able to move with speed, act swiftly, and invest or divest in capabilities quickly will be critical. Ensure diversity of thought and experience exists within your teams. It is the best insurance policy for maintaining agility whilst ensuring the robustness of your decisions. And accept that the unexpected or impossible will likely occur, and begin to prepare for those impossible developments or scenarios. So many organisations were blindsided when their overseas support centres began to fall over during the pandemic. It was a scenario we had simply failed to consider. In closing, I'd like to pose this question to you. What scenario or idea did you recently dismiss as impossible? And how would you respond if it happened tomorrow? Would you be up to the task? Thank you.
Thank you very much, David. An extraordinary, well, certainly a very challenging picture there of the new reality that we are facing. Joining us next is Cathie, Armour, Commissioner at the Australian Securities and Investments Commission. Cathie's work, she works closely with the ASIC teams that are responsible for regulating markets and for market intermediaries and the enforcement of laws relating to market integrity and corporate governance. She also focuses on the work of ASIC's Innovation Hub, which supports FinTech and RegTech activities. Here's Cathie Armour.
Thanks. Thank you, Ali, and good morning, everyone. Thanks to the RegTech Association for inviting me to speak today. I'm going to focus today on two new but quite different areas of global regulatory interest where I believe RegTech has a role to play. The first is sustainable finance disclosure, and the second is retail investor behaviour. Now, overarching change agents in our financial system are, of course, technology and innovation. They have completely transformed the way financial services are provided and will continue to do so at an exponential rate. My question for you is whether the focus of RegTech is matching this transformational growth. One of the areas where RegTech products are well entrenched is in sanctions compliance. And as governments introduce new sanctions in response to the Russian invasion of Ukraine, I couldn't help but think about the job of the sanctions team in a financial firm to ensure that all necessary adjustments were made to comply with those sanctions and be pleased about the existence of RegTech. But it led me to wonder whether we, regulators and industry alike, had really done all we could in other areas to get the most from RegTech solutions as new and complex legal requirements are introduced. A positive example is the SEC's proposed new cybersecurity rules and climate disclosure rules for public companies. The proposed reporting under these rules must be presented in inline extensible business reporting language, which is both human and machine readable and includes block text tagging as well as detailed tagging of narrative disclosures. At ASIC, we're working with industry to promote opportunities for innovation in regulatory compliance. Last week, we released the final requirements for the Internal Dispute Resolution Data Reporting Framework. This framework will let us publish system-wide data on consumer complaints. We are also part of an exciting RegTech experiment working with a small number of firms on a corporate disclosure-related challenge under the Business Research and Innovation Initiative project, which is conducted in partnership with the Department of Industry, Science, Energy and Resources. But moving on to my two specific issues. The first is regulation relating to sustainable finance and specifically climate change related disclosure by listed companies. ASIC is a member of the IOSCO Task Force on Sustainable Finance, which conducted a review of corporate sustainability disclosure guidance last year and found that investor demand for transparent, comparable sustainability-related information was often not met. Late last year, the trustees of the International Financial Reporting Standards Foundation announced the establishment of the International Sustainability Standards Board, or the ISSB. Now, it will develop high-quality global baseline climate and sustainability disclosure standards to tackle some of these challenges. And the ISSB's exposure draft standard on climate reporting has just been released. We support this exercise at ASIC. We think consistent, comparable and relevant information is critical to fully informed decisions by investors. So what are the opportunities for RegTech? Well, climate-related disclosures in the coming years have been mandated in many countries, notably for us, New Zealand and the UK, and mandate proposals, as I've mentioned, were just released by the US SEC. And these mandates will apply to the many Australian listed companies with filing obligations in those places. Now, a lot of work's been done over the years on developing climate modelling, but now is the time for RegTech firms to engage with these emerging global standards and reporting requirements, as well as with firms and investors, standard setting boards, regulators and legislatures on how these new requirements could be articulated in a way that facilitates technology compliance solutions. My second issue is not about new regulation so much, but about how new technology is transforming retail investor behaviour globally. The growth of low-cost, easily accessible digital investing and broking products, combined with the pandemic-induced market conditions and with low interest rates, has accelerated the pace of change in markets and propelled the increase in new retail investors. ASIC co-chaired another IOSCO group, this time called the Retail Market Conduct Task Force, which reviewed retail investor trends globally and their implications for market conduct. The task force identified emerging issues, including the impact of social media on retail trading decisions. Last year, ASIC's Young People and Money survey found that 33% of 18 to 21-year-olds follow at least one financial influencer or finfluencer on social media. A further 64% of young people reported changing at least one of their financial behaviours as a result of following a finfluencer. So online discussion about financial products and services can really provide terrific insights for investors, and it's positive that investors are taking a proactive interest in their financial futures. But a recognition of the importance of consumer protection in financial services has meant that financial advice activity in particular is specifically regulated. So accepting the use of technology has the potential to improve financial inclusion and to develop people's financial capabilities. How can we ensure that these services are effectively provided in compliance with our laws? To help achieve this, ASIC released an information sheet, number 269, last month, to provide clarity on how the law applies to social media influencers and the licensees who use them. It strikes me that this is an area where RegTech has a real place. Are RegTech firms considering how they could adapt their existing financial advice solutions to help social media users discuss financial matters? To conclude, at ASIC, our focus is on a fair, strong and efficient financial system for all Australians. We know that to achieve this, we must facilitate and exploit the opportunities offered by technology. RegTech is all about using technology to help firms meet their regulatory obligations. as our RegTech industry has matured in Australia, is it time to be more ambitious? I have outlined two scenarios today. One is about a global regulatory change impacting Australian companies that is being well and truly signposted in advance. The other is about a dramatic change in how retail investors globally are trading, driven by the efficiencies of online engagement. RegTech has a promise to solve the problems that the different groups face in each of these situations. My question is whether RegTech is adapting fast enough to provide solutions to these global regulatory trends before they become local problems. Financial technology has typically been developed to solve frictions in the system. Is RegTech exploiting these opportunities to solve frictions early enough in our regulatory life cycle now? So thank you very much.
Many thanks, Cathie, and some terrific challenges, which we will discuss in our roundtable in the next session after this one, and very specific challenges there for the sector. Well, next, Ian Silk is our speaker. Ian recently joined KPMG as a special advisor, working with clients and internally on strategy and leadership, ESG issues and investment matters. He recently stepped down following 15 years as Chief Executive of Australian Super, the largest of Australia's superannuation funds. Thanks, Ian.
Thank you, Ali, and good morning, everyone, and thanks for the opportunity of speaking with you today. I'm going to speak about the rise of ESG investing and the opportunities for the RegTech community. Firstly, ESG is a major and increasing force in business and investment. Secondly, I'll touch on the factors that are driving that significant change we're seeing. And thirdly, I'll briefly raise some opportunities for the RegTech sector that arise from that growth in ESG investing. So ESG investing, I think most of you know that the acronym ESG stands for environmental, social and governance factors. And the big shift we're seeing of recent times, and a shift that we're going to see continue and increase, is a move away from commercial and investment decisions being made purely on financial metrics to a broader consideration of matters that have historically not been regarded as financial measures. I'll come back to the paradox of that and the change that we're seeing there. So BCG recently announced that on the basis of a survey they've done, more than 33% of assets that are professionally managed in the United States are SRI investments. SRI stands for social responsible investments. It's something approximating ESG, and the percentage figure in Australia is something higher than that. So it's a large and increasing part of the business and investment environment that we're dealing with. So what are the factors that are driving this big change? I think there are three critical factors. The first is that business and investors are part of the community zeitgeist. They're part of the community, and so the factors that are at play in the community naturally have ripple effects through to the business and investment community. And environmental and social factors, less so governance issues in this context, but environmental and social factors are bigger issues in community discourse these days. We have NGOs, we have activist organisations, but even in family conversations, community conversations, media debates, issues about the environment, issues about gender equity, about, pardon me, native title rights, Indigenous issues, the circular economy. These are matters of mainstream debate and discourse now, and naturally they have an impact right across the community, including into the business and investment community. So it's part of the zeitgeist. The second is there was historically a distinction between values and value in relation to ESG issues. Values was a pejorative term that described people who did focus on ESG issues. They were soft, quote unquote. They weren't hard-headed financial, there was no hard-headed financial dimension to it. Value, on the other hand, was a laudable characteristic and was a commercial and financial dimension. In fact, that's a really false dichotomy. These so-called soft issues have a value dimension. Companies that manage their ESG, the ESG dimensions of their business, are companies that are into value creation. They're value accretive. Companies that are poor ESG managers, we see value degradation occurring there. So this distinction between values and values is a false distinction. It's part of well-run businesses. And the third issue that's driving this rise in ESG investment is a very commercial one for businesses and for investors. You see a lot of superannuation funds advertising their wares, and they're promoting their ESG credentials as much and sometimes more than they promote their investment credentials. Join our superannuation fund because we invest in a very socially aware manner. We're investing in environmentally conscious projects and so on. And likewise, businesses promoting their ESG credentials. And why is that? It's because their whole stakeholder universe is interested in these areas. They put a premium on these areas. So whether it's an organisation's staff, their customers, regulators, the media, their investors, they all want to see a focus on ESG matters. So it's a significant part of the business and investment world and is likely to increase. And what that means is that it's promoting opportunities for the RegTech sector, because this is still a nascent and evolving part of the business world. People are talking about ESG, there's great interest in it, but what we don't have is a common, consistent, appropriately comparable, robust set of measures to track progress, to validate an organisation's claims that it's a strong ESG investor, that its environmental credentials as espoused in some worthy report are actually being met, are validated, that the actions do match the rhetoric. So in what was otherwise a pretty disappointing COP26 last year, the International Financial Reporting Standards Board announced the establishment of the International Sustainability Standards Board. So this is a group of financially minded people who establish financial standards, said we're going to set up another board that's going to establish a whole series of, in that case, environmental standards, which were to establish global reporting standards for climate-related risks. That's one example of the trend to establish some robust, hard-headed empirical databases that companies and investors can use when they're reporting to their stakeholders about their progress, and B, for the rest of the community to interrogate and hold businesses and superannuation funds and fund managers to account to ensure, as I said, that their rhetoric matches their action. The European Union is doing a lot of work in this regard. The Securities and Exchange Commission, the SEC in the United States, is similarly doing a lot of work in this regard, because it's regulators, it's the community generally, all sorts of stakeholders, members, clients want to be assured that companies' claims about what they're doing in this area are in fact being delivered. And so the skills, the techniques, the models, the processes that the RegTech community has developed and is the practitioners, the skills that the practitioners have a ready application in this area. And this is an area of very significant increasing demand. So I'd invite the RegTech community to think about ESG investing, this increasing demand for the skills and techniques that you've developed and how they can be transported into your community. Thank you very much.
Ian, thank you very much. And some very common themes there between Cathie and Ian, and the opportunities in the space of technology compliance solutions, I guess, around ESG. Well, Jesse Arundell joins us now. He's Head of Emerging Technology at Commonwealth Bank, where he's responsible for accelerating the bank's adoption of new and emerging technologies. He also sits on multiple committees and advisory boards, providing advice and counsel on company strategy, structure, and people capabilities. Here's to Jesse.
Good morning, good afternoon, and good evening. For those of you who I haven't met before, my name is Jesse Arundell, and I lead the Emerging Technology team here at the Commonwealth Bank of Australia. We're incredibly excited about the opportunity that's at hand with the global growth and seemingly accelerated adoption of RegTech in financial services institutions, but also other regulated entities globally. And what I wanted to spend this morning's presentation and provocative slot on was to share a little bit about our team here in the Commonwealth Bank, our approach to RegTech, but also to really share our view and our thesis on how we think about assessing the potential of RegTech providers inside the bank, and this really crystal need that we see constantly in RegTech solutions. And I thought that would be really powerful for both regulated entities to ponder on as they're considering the use of RegTech within their organisations, for RegTech founders and teams and the amazing entrepreneurs that are building the solutions, and also for other interested parties within the broader RegTech ecosystem itself. So here at the Commonwealth Bank, I lead a team that is called Emerging Technology, and our team is set up to help accelerate the bank's adoption of new and emerging technologies. And the way that we do that is that we run a portfolio of innovation initiatives that are either focused on building new software, new systems, or new algorithms for the bank, or alternatively working with our technology partners, enterprise technology startups, and scale-ups from all over the world to validate the use of their technology inside the bank. Now, for the last 3 years, we've been very, very keen and interested and have had a huge focus on RegTech. And the reason that we have had a focus on RegTech is we believe that it offers us enormous potential in terms of our ability to digitize and to automate our operational risk, compliance, and financial crime processes right across the organisation and the institution. And the reason that we think that is important is because it'll allow us to deliver better risk, better compliance, and fundamentally better customer outcomes across the organisation. Now, when we started looking at RegTech, it was quite a nascent early scene 3 to 4 years ago. I think what's fantastic is just not only how much growth has happened in that time, but also how far the providers have come. But I think what is incredibly important to remember is that we are still at day one. And I think there is so much potential as it pertains to the software, the systems, the algorithms that entrepreneurs are building all over the world that'll help us achieve that vision of digitizing and automating operational risk, compliance, and financial crime processes. Now, when we started our RegTech journey, what we did was we went out and we spoke to over 200 different RegTech providers. Now, what we did was we met with their founding teams, we learned about their technologies, and it allowed us to develop a house view where we were able to develop what we call the RegTech map. And our RegTech map was effectively a thematic analysis and assessment of all of the different RegTech providers that we'd spoken to, that we'd done market research on. And since then, what we've done is systematically look at those different thematics, those different kind of topic areas, and then we've been able to pick out and work with RegTech providers in those thematics to solve real problems inside the bank. Now, whether that is artificial intelligence to help us review marketing collateral and communications, whether that is natural language processing to help us decompose and to better understand the regulatory data that holds all the obligations to our organisation, or whether that is the use of graph analytics to help us better understand and to visualise the complex transaction flows that occur between our customers. And what I think is important is that regardless of the RegTech provider, regardless of the RegTech software that we have tested, we have validated, we have explored within the context of the bank, the key thing that all of our work continues to come back to is people. And what I think is really important to remember is that people are at the heart of technology. And they're both at the heart of how you design and how you build technology, but also these are the people who will either use or assist the use of technology inside large regulated entities. And what we see is that if I think about the bank's process for developing new products, new services, new technologies, and even the way that my team builds new software, new systems, and new algorithms inside the organization, having customer centricity or user centricity at the heart of everything you do is key. It is so important. And what we see and what we're starting to observe, and what I think the RegTech ecosystem needs to continue to focus on, is to really say, well, who are the users of our software products, our platforms, and our systems inside regulated entities? And how are we making their jobs and their lives just that little bit easier? And what I mean by that is to say that the process of being able to digitize, to automate, and to be able to explore more complex data in a range of minutes, if not hours, in comparison to a human sitting there and reviewing documentation, process paperwork, transactions, is that the key is enablement and empowerment. And if you think about systems and software and their ability to be able to analyze complex data patterns and large volumes of data at scale, or its ability to help, again, change the way that work is done, you have to then think about, well, how are we empowering and how are we ensuring that we are making the risk managers, the compliance officers, the legal counsels, the operations analysts inside these entities superheroes as a result of the RegTech solutions and software that we're building? I think that is the key thing that I wanted to provoke the audience with today, and is to really, I guess, challenge the ecosystem to say, for each of you, how is your RegTech software designed and developed for your end users or your customers? Do you have a view of the ideal end user, the persona of that person, the types of problems, the types of challenges, the types of things they need to get done inside regulated entities? And then how are you helping? How are you making life better? How are you making things easier? How are you making things simpler? How are you making the heroes, them the heroes of their own story and their own journey inside the organization? I think that that shift is incredibly powerful in the way that you think about the development of new products, new services, and software. And so my provocative statement to close out this morning's presentation is to say, for each of you, I'd just like you to take a moment to ponder and think about who is the end user of my software, my system, my algorithm, and how am I making their life better inside a regulated entity? So thank you all. I'm incredibly excited about the rest of today's agenda, and again, the continued growth in the ecosystem. We're at the dawn of a new beginning, and I can't wait to see the continuated innovation, growth, and technology that is going to be built and born right here in Australia, but also all over the world as they help regulated entities digitize and automate op risk compliance and financial crime at scale. Thank you all.
Thank you very much, Jesse. And it is a fascinating way to focus us for our next session, that it's not just about identifying the gap, identifying the need, or identifying the problem. It's about identifying the people who are going to be using the RegTech, that user centricity or customer centricity. And that's a theme that we will definitely take up in our roundtable. Well, finally, in our series of rapid fire presentations this morning, we have Ross Buckley, the KPMG Law KWM Professor of Disruptive Innovation and an Australian Research Council Laureate Fellow at UNSW Sydney. His work is currently the most frequently downloaded legal research in the world from the Social Science Research Network. Ross, thank you.
Hello, thanks Ali, and thanks to the Association for the opportunity to speak today. I want to speak to you about the major long-term potential of RegTech. It's one of my favourite topics. And to understand where we're going with RegTech, I think we need to understand the fundamental shift that's happening in financial services, and that shift is less evident in Australia, I would assert, than it is overseas, particularly in China. And what I'm talking about is a shift for banks and financial services companies from know your customer to know your data. So historically, banking has been a customer-focused business. It's been a relational business. It's a reactive business. The bank reacts to the information the customer provides to them in various forms. And it's sort of a push compliant business. It deals with the data that comes to it and responds to that data. We're moving to a different world with the emergence into financial services of big techs and data companies. They don't necessarily start with what the customers told them. They start with what they know from a whole wide range of sources. So they start with data. Part of that data is what the customer tells them. A lot of the data is what they gather from all their other sources. Most of them have been major players in other sectors beforehand. Think Google, Amazon, Ant Financial in China, or WeChat in China. So they've got all this other data. They're starting from there. That allows them to be proactive. They're not necessarily reactive. It allows them to design things that promote good behaviour from their financial customers, not merely try to stop the financial services customers misbehaving. And it means they use APIs broadly to pull data in so that they can make better credit and risk decisions. This is a different world. It isn't very well established trend yet in Australia because our banks are very profitable and very comfortable, etc. But it's very clear in China. China's leading the world on this. Now, what's the potential for RegTech in this new data-driven world? Andy Haldane is one of my favourite thinkers. He used to be the chief economist of the Bank of England. And 8 years ago, he gave a speech in which he said, "I have a dream. It is futuristic, but realistic. It involves a Star Trek chair and a bank of monitors. It would involve tracking the global flow of funds in close to real time from a Star Trek chair using a bank of monitors, in much the same way as happens with global weather systems and global internet traffic. Its centerpiece would be a global map of financial flows charting spillovers and correlation." Now that is a powerful dream. For Andy, I'm sure it is that he dreams of being Captain Kirk because he mentions the Star Trek chair and the bank of monitors twice in the one quote, which is not bad in one paragraph. But for the rest of us, when 1997 Asian crisis hit this part of the world, I knew exactly what had caused it 2 years later. The world had largely worked out the GFC in 2008, what had caused it, about 3 years later. What RegTech ultimately gives financial regulators the potential to do is work these things out in near to real time so that they can steer an economy or steer firms, not merely prosecute breaches after the fact, which is what we have at the moment. So how much information, how much data do regulators have? Well, if we jump across to the US, there is a form called an FR 2052A form. Now, with all respect to the minister, that could only be a form for government, right? Because only a government could name something at FR 2052A. It's colloquially known as a 5G. It's 64 pages long. The US has a rule that you have to estimate. If you're going to have a reporting requirement, you must estimate how much people time it takes to fulfill that requirement. The estimate is 220 hours of people time to fill out this form. If you are a systemically important bank, you have to file that form every day in the US into the Federal Reserve. It has to be up to date as of close of business 2 days before. If you're not systemically important, you have to file it once a month and it only has to be up to date 15 days before. But there must at the minimum be about 40 people sitting in each systemically important bank in the US, providing all that information to the Fed. And what do you think the Fed does with it? My guess is it files it away, waits for the next 2008, and then it'll dig it up. What it hasn't got is the capacity to run algorithms all over this stuff. What it should be doing is running algorithms all over this stuff provided by the RegTech sector so that it can fulfill Andy Haldane's vision, so that it can see what's happening in very close to real time. So that's the big potential of RegTech, the long-term potential of where this will go. Now, we have to get it right, because if the Fed is using algorithms and not intuition and gut instinct and normal analysis and whatever it uses now, if it's using algorithms and the algorithms are wrong, we've got a big problem on our hands, right? We've got RegTech hiding the next crisis coming rather than identifying it. But the potential is to identify the next crisis, and that potential is replicated in a lot of sectors. My next big point is RegTech is not just a subset of fintech. As we heard from Cathie Armour, it's usable in a lot of other sectors, in health, in telecoms, in renewable energy, in regular energy, in agriculture. In lots of sectors, RegTech is really powerful. And in a lot of those sectors, the ultimate power of them is going to be letting the regulators in on the data feed. You know, when the regulator can have access to the data that the tech is producing, we'll have much more empowered regulators who will be able to work much more efficiently and much less intrusively. So we're only going to realise these benefits of RegTech with a new regulatory framework. And this is a huge challenge for the regulators. And if I had any message to Australian governments today, it would be, in this world, we have to fund regulators a lot better than we do now. Because the regulators need access to really sophisticated technology. They need access to the human resources that, you know, the skilled people who can do this stuff. And those people in our modern economy are simply not cheap. And fintech activity generally, if you notice, flows to the better regulated markets. When the ICO boom started a few years ago, 2017, it was spread pretty evenly across our region, you know, Thailand, Hong Kong, Vietnam, Singapore, etc. It pretty much all ended up in Singapore, the most expensive place to live, but the place with the most sophisticated regulator. The ICO boom started similarly in Europe, spread broadly, and ended up mostly in Switzerland for much the same reasons. Good regulation attracts the fintech players who you want, but good regulation does not come cheaply. You've got to fund these regulators much more than we funded them in the past. My other points, to reiterate, RegTech is not a subsector of fintech. The latest developments in Russia are extraordinary. The sanctions on Russia are completely unprecedented. We have debanked a nation in Russia by freezing their foreign exchange reserves of the central bank, something nobody's ever thought of doing before, I think. So there's a huge potential for RegTech in this new world of sanctions, in terms of sanctions identification, sanctions enforcement, entities being able to prove they're compliant with sanctions. Another point, RegTech is more than an efficiency tool. We have to stop thinking about it as a way of saving banks money on meeting their compliance obligations and see it as the game changer it is. Because RegTech is going to be central in this paradigm shift that is coming from relying on what the customers tell us to relying on all the data out there and harvesting all the data out there. RegTech is going to be absolutely central in that because it will enable regulators to utilize these rivers of information. At the moment, we burden corporate Australia with all of these extensive reporting requirements. And when they hit the regulators' desks, we don't maximize these things. We don't use this information. It just sits there waiting to underpin an enforcement action in the fullness of time. And that's hugely inefficient. So there is a new world out there. I suppose my challenge to the RegTech Association is have fun stepping up to it. Thank you.
Thank you very much, Ross. As with all our presentations this morning, plenty of food for thought. And I particularly liked how Ross flipped it a bit to also look at the regulators and the need to fund them better, because good regulators attract good RegTech and indeed good fintech as well. Well, that concludes our public sessions for today. I would urge you to take part in the poll. It is now live on the platform. The question is, the question has just moved on my platform, which is often the way that it is, but it talks about your priorities. So you can vote on that platform just below where you can ask a question, and we welcome your questions in the next session in the roundtable. We've got a great array of speakers coming up, so for members and special guests, stay with us and that roundtable will start in just a couple of minutes. Many thanks.